Well, the Automobile Association has expressed relief that Finance Minister Tito Mboweni did not increase fuel levies above inflation. Of particular worry to the association, though, is the inclusion of the new carbon tax announced by the minister yesterday. To talk to us more about the impact of the budget that it will have on consumers, we're joined from our Pretoria studio by Layton Beard. He's from the Automobile Association of South Africa. Layton, a very good morning to you. Yes, and despite the AA being a little encouraged that the fuel levies have not increased above inflation, you have some concerns, especially when it comes to this carbon tax and what you're calling the exploitation then of the consumer.
Yeah, good morning, Yuveka. Look, it's I think before the budget speech there was speculation that the two big levies that are attached to the fuel price, the general fuel levy and the road accident fund levy, would be increased significantly. So during the budget yesterday, or when they were increased by marginal amounts that were below inflation, obviously we were very encouraged by that, and we are relieved for consumers' sake that those amounts weren't increased by much more than that. But these taxes are a go-to tax that are placed on every litre of fuel. And what we see now is that there is a carbon tax of 9 cents or 10 cents for diesel that is being added to the fuel price as well. And for us, that is grossly unfair, because at this stage, we are seeing that motorists are going to be punished for using fuel that isn't clean in the form of a carbon tax. The problem is that there is no other alternative fuel that's out there. But besides that, it just seems to us that we're adding another line of taxation to the fuel price, and it's just adding to the problems that consumers face. When we unpack the fuel price, we see that between 40 and 42% of every litre of petrol is going towards taxes, which in reality is a huge amount of money that consumers are paying on top of all the other taxes that they are paying. So that for us as the AA is obviously very concerning.
And, also concerns here, Layton, that although we have seen, the start of the year in terms of fuel price hikes, nothing really major, but just from your side, you see these fuel levies as a sign of sort of worse things to come then already. We already set back before we even begin with any major hikes here.
Yeah, absolutely. I mean, the fuel levy increases, the general fuel and RAF levy will come in April. The carbon tax levy will come in later in the year. But that gets added to whatever adjustment is made for that specific month. So, for instance, when we look forward now to March, we're already predicting that we're going to have quite a significant increase to the fuel price going into March. Going into April, obviously, we'll need to see what happens. But if there is a fuel price increase in March going into April, for example, and this is not the price, I'm just giving an example, but if there is a 10-cent increase to the price of fuel going from March into April, then on top of that 10-cent increase, you've got to add then the 20 cents that's being added to the general fuel levy and the road accident fund levy, which means that you already have a 30-cent increase going into April. And then when the carbon tax comes in, then that's a tax that gets added onto it. Our concern really is that we're adding layers of taxation to the fuel price and making the fuel price a lot more than what it should be. And at the end of the day, consumers are paying for it, specifically poorer consumers who at this stage are really very embattled financially. So it is very worrisome, Yuveka, and we're just adding more taxes to the fuel price.
So, Layton, I mean, does the AA believe that government could avoid doing these things, that there is a way, to work around this?
Look, I mean, our belief is that in terms of the two major factors that determine the fuel price, you've got international petroleum prices and you've got the Rand-US dollar exchange rate. Now, the South African government has very little room to maneuver within those two parameters. Sure, in terms of the Rand-US dollar exchange rate, you're looking for a policy, a climate of policy certainty, of economic stability, of investor friendliness in terms of your policies. So in terms of the Rand and its strength against the dollar, the government has some room to maneuver there. But a direct impact the government does have in terms of the fuel price is on the taxes. And what we've seen now is that the government is just adding another layer to that. And we would obviously have liked to have seen that these taxes reduce instead of increase for the sake of consumers. And that's obviously not happened.